Spotify announces results before the market opens on Tuesday, and this is my biggest holding. This is one of the companies that I follow most closely here on Asymmetric Investing. And so I want to dig into exactly what I'm expecting and what investors should be looking for in the quarter, because it's all about the trends with Spotify. If a company is trending in the right direction, the stock has a ton of potential. And we've seen a lot of good trends over the last 3 or 4 quarters. So we want that to continue in the first quarter of 2024. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So I'm gonna use the fourth quarter results as sort of a baseline for this conversation, because it puts in good context what we're gonna see in the earnings report and then the direction that we should expect results to be headed. So this is what the results look like, and this is a pretty standard template for them. So this is going to be the first executive summary. This is going to give you the baseline information that you need to know. They start here with the user number. And what has been incredibly impressive for Spotify over the last couple of years is the fact that they're growing in excess of 20% on a user basis. Now, most of these users are ad supported because Spotify is no longer having most of its growth in the US and Europe, where people are maybe willing to pay $10, $15 a month for a premium service. They're growing in Africa, South America, a little bit lower end markets from a revenue standpoint. And so that's why these are ad supported markets. But you want to have this user base growing, because that's going to ultimately drive your value to content providers, whether that's podcasts or music studios. And it's also going to make your advertising business more attractive. I'll get to that in just a little bit. The financials is one thing that we're going to want to watch closely. We should see premium revenue continue to grow a little bit faster than the number of premium subscriptions. The reason for that is price increases that were implemented late last year. So we've started to see that flow through the system. But we're going to see that more in the first quarter and then throughout 2024 as they bundle in more services, particularly with audiobooks. So look for the premium revenue number to actually grow faster than premium subscriptions. Ad supported, this is where I've been a little bit disappointed in Spotify's growth. But if we start to see 20-25% growth here on an ad supported revenue perspective, that's really going to send the stock higher. So temper expectations, but this is where long-term I want to see the most growth. And then margins are going to be very important. Margins are always very important for Spotify, and I'll get to a little bit why, but this is, again, a baseline, 26.7% last quarter. Expect that to be at least a little bit higher this quarter. Operating margins, we want to see this turn positive, and then free cash flow. This is going to be a little bit volatile quarter to quarter because there's timing issues with how they're paid for certain pieces of content. So this was a little bit elevated in the fourth quarter, but I want to see this trend towards $1 billion per quarter, 1 billion euros per quarter. They are reporting their numbers in euros. You can see some of the revenue trends for both the premium business on the top and then the ad-supported business, and this is trailing 12-month numbers. That's why the ad-supported business in particular is really lumpy quarter to quarter, but if you use last 12-month numbers, it kind of smooths those things out. We want to see this not only grow overall, but also grow as a percentage of revenue, which it really hasn't over the last few years. So expect both of these to be a little bit higher, and this premium ARPU, or average revenue per user, should be moving higher in 2024. So expect that to bump up a little bit as well. Gross margin, this is going to be something I'm going to watch closely. Premium gross margin, probably not going to change all that much. You're going to want to see it right around 30%, but revenue is shared with music studios. So there is going to be a cap on the margin that they're going to be able to generate. So that's why 29.1% is fine. I would love it to be more like 31, 32%, but that's probably asking too much, at least for now. Where you want to see improvement is on the ad-supported side. There are a few things that are going to be happening this quarter and then throughout 2024. One is the costs associated with podcasts go into the ad-supported business. So all of those exclusive deals that they signed during the pandemic and then some of them that ended in 2024, that's going to come out of the expenses in advertising. So that should help margins. That's one of the reasons margins have been a little bit higher recently, is some of those costs are coming out. I would also expect to see better revenue, so more operating leverage on the revenue that you're generating from the ad-supported business. So that should generate a little bit higher margins. Long term, we want this ad-supported gross margin number to be more like 40 or 50% even. So we're nowhere near that, but Spotify needs to scale the business, in other words, grow revenue, and then get operating leverage from that growth. So right now, in 2024, we just want to see progress on that path forward. Not necessarily going to see anything higher than maybe a small increase in margins from the ad side, but that's what I'm going to be watching for, and then listening close on the conference call to what is happening with advertising. The operating expense side, we know a little bit more about what's going to happen here. Spotify has had a number of layoffs over the past about 16 months, and that's why we're seeing all expenses start to come down. You can see that this green column peaked in Q2 2023, and now it's starting to come down. There is a lag, particularly for a European company like Spotify, between when layoffs are announced and when we actually see expenses come down. That lag can be 6 to 12 months in some cases. So we should see costs, particularly costs for sales and marketing, continue to come down in the first quarter, and I would expect that to happen throughout 2024. So keep an eye on that, because this is ultimately what's going to drive profitability. If you're having revenue grow up, if you're having revenue increase at a double-digit rate, your margin is staying flat or maybe even increasing just slightly, the way that you're going to get that money to flow to the bottom line is keep your operating expenses flat or even declining. And that's what we're seeing with Spotify. So you're getting a bigger spread between your gross margin and your operating margin. That's where you want to get that leverage. That's where you're going to get more cash flow. And that's one of the reasons I'm so bullish on the business. Cash flow, this is ultimately what you want to drive. Look at this top chart right here. This is the average free cash flow over the last 12 months. You can see that the fourth quarter of 2023 is the massive outlier here, but look for that to continue as revenue grows, as margins improve, and as operating costs come down. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Really, the number that's going to drive all of this is going to be that user growth that I talked about early on. Because if users are growing, then revenue is going to grow, advertising is going to grow, and we're going to get operating leverage in the business. And there's been a ton of momentum on the user side. I think Spotify's experience has gotten better. It's taken a lead over companies like Apple and Amazon. Google recently shut down some of their podcast products. So I think everything's moving in the right direction for Spotify. We just need more evidence that that momentum is continuing. So that's exactly what I'm looking for in first quarter results. I will be back tomorrow covering results and the conference call. So check back here on Asymmetric Investing for more, along with the stock's reaction. We don't know if the stock is going to go up or down, but there's often a pretty big reaction to Spotify's results. What are you expecting tomorrow? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.